Welcome to The Real Money Show, the number 18778 Silver, the website guildhallwealth.com. My name is Jeremy Wiseman. I'm joined by Jerry Correia. And Jerry, it seemed like no matter where I turned, whatever podcast, whatever YouTube show, everyone is jumping on the bandwagon. And they're coming around to the way we always felt, which was that the pivot's coming. And everybody's talking about rates coming down. Everybody. It's like it's completely understood now that rates are coming down at some point in the next 5-6 months. Are you noticing that too?
Oh, we noticed it. It's actually published on the Fed Watch tool. As you can go to CME, the website, and view their tool that gives us an idea of when they're expected to cut. So cuts can be anticipated anywhere from January next year, into March. So they see cuts happening for in the first 3 months for the first quarter of 2024. Because people are citing, Paul Gambles of MGM Group. He says the Fed is behind the curve when it comes to cutting rates. And traders are now pricing in a 25 basis point cut as early as March. And veteran investor David Roche says almost certain that the Fed is done raising rates and inflation will not go down to 2% anymore. So this is coming from professionals, and this is coming from NBC.
Yeah.
So the consensus is rate cuts are coming.
Yeah, Normieville. Even Normieville is talking about rates coming down. Real estate agents everywhere, are down on their knees praying, thank you.
Yeah.
Everyone is. I think it's going to be interesting to see how it plays out. I was listening to a podcast with David Rosenberg, and is it Rosenberg or Rosenblum? Can't remember.
Don't remember. Drawing a blank.
Okay. Anyway, he just basically is like, hey, look, when they drop rates, recession's coming, and there's no soft landing here. The recession is coming. This is just all part and parcel of the boom and bust cycle, and to them, it's all normal. But the debts are out of control, and I think that you have two ways of looking at this. You have people like Rafi Farber who are saying, this is going to result in lowering interest rates. They're going to then print more money. It's the end game, and new financial system coming. Others who also believe a new financial system is coming are looking at the data that came before, and they're saying, look, this is what happens. They have a rate hiking cycle followed by a lowering cycle, and this is the way of the world. I don't believe it's the way of the world, although I'm not quite sure I'm in the Rafi Farber camp that they're going to print to infinity. I don't know. What are your thoughts?
I think the credit cycle is around the corner, that they do have to stimulate the market. The Fed's liquidity withdrawal happening, and the signals are signaling trouble for the markets. The Federal Reserve reverse repo facility, which is crucial in supporting liquidity and the stocks, is declining, and it's nearing zero, which signals a tough time and tough conditions ahead. This decrease could also lead to less support for the stocks' potential funding challenges going forward. This echoes the issues of 2019. They tried to avoid it. They got through it because of all the stimulus that was printed in 2020. It really covered that over, or just pivoted and told us to look elsewhere. And we did for a while. A couple of years passed since 2024 now, almost 2024, and the reverse repo issue and the signals of this facility declining is rearing its ugly head. Liquidity is being drained around the world. We're seeing what's going on in places like Japan. They're right now facing a disastrous $20 trillion carry trade. And remember, we're talking about currencies. Currencies is the fabric of all of the things we're talking about: money, currency, and the way things move in liquidity. Japan is a very important, obviously, trading partner, but the cross of the USD yen, it's the most liquid. It's supposed to be the most liquid and supposed to be the one that we trade into. It's disastrous. A lot of speculation that the Bank of Japan will now tighten interest rates. This was the zombie central bank. continue to print until oblivion, and now they're facing they're trapped in a precarious situation, says Deutsche Bank's chief FX strategist, George Saravelos. They're trapped. It's a choice between hyperinflation with a currency collapse or a market crash leading to social unrest. So just like the Federal Reserve, every single central bank, including the Bank of Japan, is doomed.
I guess, there's an end limit to once you start printing money like crazy and just putting it on the books, the interest rates kind of don't really matter at one point because you've printed into oblivion. And I think part of that is looking for measurements that tell you this is happening. And precious metals have always been the canary in the coal mine, which is why it's so important on behalf of those entities to try to repress the price, because they don't want that dial and that measuring tool to tell you that there's a major problem. Now, last week, moving into Friday and then Sunday evening, we saw a spike up in the metals, and a lot of people would say, well, they're basically foreshadowing what's happening. The markets are smart. They see that the rate cuts are coming. Gold and silver are going to move up as a result, and they're moving up now in that sense. But then we had containment, and I would characterize it as containment because we've had pullbacks in the market. Ultimately, I don't think it matters. We broke $2,000 an ounce on gold. We're going to be backfilling that over the next several months or whatnot without any other spikes up in the market. That's it. Psychologically, we broke $2,000 an ounce. As gold continues to move higher, I think it's going to drag silver up with it. And once it drags silver above $30 an ounce, it's going to be off to the races for silver as well. That's my thought. What do you think, Jerry?
With regards to the all-time high that gold posted last Sunday, it definitely woke up the guys at the COMEX. This was obviously 7 o'clock or 6 o'clock in the evening Sunday night when China opened up. China was blasting into the market really, really big. And the guys at the COMEX had to get up, and they just dumped contracts onto the market. This contract issue will fail because the metals are moving from the west, where we get their price currently, and it's heading eastward. And just like there was a seismic shift that happened last week, and this coincides with our market in precious metals because the petrodollar endgame is moving even closer. The United Arab Emirates decided to ditch the US dollar for good, and the Saudis will be next. Now, key nations being Saudi Arabia and the UAE trade oil in currencies right now other than the US dollars, and that's the end for the petrodollar. And this is influenced by the BRICS bloc, which recently adding the UAE along with Saudi Arabia, Egypt, Ethiopia, Iran, and Argentina. These nations are now pricing real resources in other currencies. So the currency situation in the U.S. it's not getting better. You can't raise your rates high enough. You can't drop them fast enough. And when they begin to drop the rates to try to stimulate the market in pressure in the stock market, it's going to be too late. Rate cuts always usher in the recession. So we're just right now at this precipice of let's see what the Fed does. Let's dissect what they say and do what they do, because they're acquiring precious metals. Central banks are acquiring precious metals, and all we have to do is replicate and do the same thing, follow the smart money. And the smart money is long-term money. It's generational wealth, and they're acquiring precious metals and real assets. So, let's dissect and filter through the noise, watch the gold market. The 1985 is a support, but when silver breaks above 26 and 30, as you mentioned, off to the races we go.
Yeah, and if you want to get involved in the physical precious metal market, the number is 18778 silver. The website, guildhallwealth.com. You can buy it direct. You can go to our e-store at guildhallpreciousmetals.com and pick up a few tubes of silver maples, maybe some 10-ounce bars. Always start small, get your feet wet. Comfort breeds confidence. You can also acquire physical precious metals within a registered account. And we're going to talk about that in the next segment, Jerry, because there's a lot of confusion around the phrase, if you can't hold it, you don't own it. So let's talk about that in the next segment. 1-877-8-SILVER, the website, guildhallwealth.com. It's The Real Money Show on 640 Toronto. Welcome back to The Real Money Show, the number 1-877-8-SILVER, and the website, guildhallwealth.com. I think, Jerry, it's easy for us to keep our eye on the prize because when you're looking at central banks and you hear all the noise as you were discussing about interest rates, yada, yada, we always keep in the back of our minds that this is all just fake money. This is all just doesn't have any value. You mentioned the petrodollar. And if you look at the history of the petrodollar, what it is, which Henry Kissinger was a big part of creating that, was after they got rid of the gold standard, they needed something to keep credibility for the US dollar. And so what they did is they said, well, you're going to use our dollar for global trade, specifically for oil, and in return, we'll give you protection. And that helped guarantee and continue to have the US dollar as the world's reserve currency. So it would be placed in everybody's accounts, in all these countries' accounts, and they would have to buy oil in that dollar. That is going away. And with it, that one block, that one keystone to maintaining credibility in the US dollar is going away with it. And this is a long-term thing. I notice that a lot of people are always looking for a lottery thing, right? They're always looking for the big breakout, the big thing to happen that's going to just absolutely change everything. You know, you wake up one day and read in your horoscope, it says, today's the day, my friend. Mm-hmm. It's all going to happen to you today. Things move in a larger kind of way. They take a little bit more time. You know, gold has moved up dramatically over the last decade and a half without the spikes. Right? Being up 470% over a 20-year period, what spike do you need, right? So we don't always have to look for the big one. So this process of moving away from the petrodollar is a slow process, but it's a significant process because what it's doing is it's taking away that keystone and linchpin of what replaced the backing of the US dollar. It was then backed by military. Yeah. Now the BRICS nations are saying, nope, we want consensus. We're going to build consensus. And how are we going to back everything up? And all of those countries are all, as you said in the last segment, buying physical gold for their central banks. Some are buying physical silver for their central banks. So this is a huge shift, isn't it?
Absolutely. Because with regards to the activity in gold and silver, why wouldn't the East want that participation? Why wouldn't they want the control of the price? They do all the work. It's noted that 60% plus of all gold and silver activity is done in the former Soviet Union. This is mining. This is melting, minting, vaulting, trading. And where we get our prices right now, the COMEX and the LBMA, London, they do no such activity. They have gold in the vaults, but depleting reserves, and it's the arbitrage that is going on. This is the slow roll. You mentioned that it's going to take time, but it is a seismic shift away from the petrodollar and away from the way gold and silver are priced. These are two of the most important elements, if not in the world. And the demand going into for silver, it's crucial. So this is a seismic shift, and we have to shift with it, follow the yellow brick road towards this gold standard that we will see a financial reset. And this is probably the most exciting time to be in precious metals, looking towards precious metals and doing it the right way. Guildhall, we do not offer things like gold and silver proxies, certificates, ETFs. This is not gold ownership. True gold ownership is unencumbered and without counterparty risk. So if you're looking at buying and holding physical gold and silver the right way, you got to talk to us. You got to find out, what is it about Guildhall? How do I get it in my portfolio? How easy is it to sell when I need to liquidate and get it in my hands? So this is the right way to do it, and give us a call. We'll show you the ropes.
The number 1-8778-SILVER, the website guildhallwealth.com. You know, Jerry, a lot of our clients are well educated in the market. They're checking out different videos and podcasts. And what you'll often hear is the phrase, if you can't hold it, you don't own it. And I think that can sometimes confuse people in a way, because they get a sense, especially from a lot of these videos, that if you don't have it in your basement, you don't own it, right? If you cannot hold it in your hand at all given times, you don't own it. And I want to discuss that a little bit, because I think it needs a little more nuance. When we're talking about if you can't hold it, you don't own it, what we're talking about is the litmus test for ownership. So you just mentioned it. If I have an ETF, can I go and visit the physical product? No, you don't own anything. If you have a gold-backed fund in your portfolio, can you go and visit the product even if the fund lists all the serial numbers? No, because you don't own anything in there. What about a pool account? Can I go and visit the product and hold any of that physical gold or silver in my hand? No, because you don't actually have any of it allocated to you. So you don't own anything if it's not allocated to you. I mean, you can have ownership. You can have one-to-one ownership, but the idea is if you're lacking allocation, you can't physically go and hold anything in your hand. And if you can't do that, then what you have is a very clear line of ownership. So that's why for us, when it comes to a depository account or your registered account, you have to have it fully allocated so that you can go and personally audit the holdings. If you can go there and personally audit and hold it in your hand, then you have ownership. If you can't hold it, you don't own it. That's the litmus test.
That is the litmus test. And to know that you have, yes, you have serial numbers, but they're allocated and titled to the owner. It's very similar to a vehicle. A car has a VIN number on it. You have ownership. This is what we offer. This is what you're getting when you have a private depository storage account with Guildhall. You have direct ownership, and the off ramp, getting it out. It's that. Can I access it if push comes to shove and I need to take it? And that goes for the RSPs. And if you have a one-to-one in some other type of vehicle, it's going to be very difficult to take delivery of the product. You need to own those bars under your name. You have to own specific bars so that you can request bar number 1, 2, 3, 4, 5. Yes, you can get that in your hand, and you can get that rather quickly. And if it's an RSP, we have to treat it just like any other RSP. I have to pay withholding taxes. You have to pay withholding taxes. But if we can absorb the 30% withholding tax, for example, the precious metals will exceed that 30%. So you're going to make that back up eventually, or pay it earlier on. So we have clients that want to do a little bit of both.
Oh, I see what you're saying. Well, I noticed that every year, December and January, we have a lot of clients that take advantage of, they have to take out their RIF or LIF withdrawals, and they take advantage of an in-kind delivery. They can actually take delivery of that physical product. So it's key. Now, it's a lot of work. I'm not going to lie. It's a lot of work. And we do it. We do it happily because it's such a great feature of this type of vehicle. Now, to your point, Jerry, if someone wants to pay withholding tax, they absolutely can, and they can still take that that withdrawal, that in-kind withdrawal. But here's the thing, you put your money into an RSP to defer the taxes, pay the least amount of taxes as possible, and keep it out of the hands of a government that is spending frivolously with your money, right? How do you create accountability? Give them less. Keep as much as you can possibly, right? Very also, true. The more you're putting into an RSP, the more you're staking yourself. You're giving yourself a chance to make a lot of money. What I find one of the biggest, for me personally, misconceptions out there is people and we don't have a lot of people take early withdrawals and pay that 30%. But there's a lot of people who are concerned that they would rather pay less now. Mm-hmm. They're so confident about the market that they don't want to pay a whole bunch of taxes later. Mm-hmm. Nobody starts a business by saying, I don't want to pay insurance. I don't want to pay health benefits. I don't want to pay income taxes to the government because I have a successful business. I don't want to have to take care of 20 employees. No one would start a business. You do it because you're going to make so much money. You hope that you make so much money that you don't care about all those costs of doing business. Think bigger is what I'm saying. Think bigger. Mm-hmm. Now, gold and silver over the long term, and I know that's tough because a lot of people think short term. Short term, long term for most people is 5 years, Jerry. It really is.
Yeah.
You know, it's a high school education. But if you can think long term about what is happening in the gold and silver market, up until this time, they're up either close to 400% or over 450% for both metals. They have not only overcome inflation in a portfolio, they have kept up with inflation, beat it. They've beat the 30% if you wanted to withdraw it early. They've paid the taxes if you have a RIF account to sell it. So the more you can think about gold and silver long term as an asset to hold in your portfolio, the more you kind of stray away from the concept of investing.
Very true.
We're not advisors. I don't want to be an advisor. I'm just looking at an asset that has continued to outperform inflation, and in a registered account will outperform the income tax you might have to eventually pay, and outperform that and withholding tax if you wanted to do it. And that's what the beauty of holding a real asset in your hand that's finite in nature, that has an innate use. Silver has so many uses, everyday uses. We should get into those uses in the next segment. Gold as well. It's immutable. It doesn't disappear. It doesn't corrode. It doesn't erode. It's divisible. You can form it into anything. There's been civilizations that have come and left, and still we're pulling out their physical gold out of the ground. I mean, that is trust. Mm-hmm. You know, we're talking thousands of years of trust. So if you can hold it for 20, 30 years in a portfolio, it's going to do a great job for you. Give us a call. We're happy to talk about it. We love talking about this and show you the strategies of how you can be successful with physical metals in a portfolio. The number 1-877-8-SILVER. The website, guildhallwealth.com. More to come on The Real Money Show on 640 Toronto. Welcome back to The Real Money Show. The number 1-877-8-SILVER. The website, guildhallwealth.com. Jerry, we've talked a little bit about the idea of if you can't hold it, you don't own it. It's a litmus test. It's the ability to know that you actually own something versus you have counterparty risk. And we also talked about the interest rates going down, and again, the bandwagon, which I find so interesting that everyone was so quick to that. Now, looking back, we did say that there would eventually be a pivot, but I think everyone in our community was ahead of it. We thought it would happen probably this March or May versus what we're now looking at as 2024. And so as we're moving into the end of the year, I feel like 2023, even though we're up on the year for both metals, I believe we'll close up on the year for both metals. I feel that it's a repeat of what we saw in 2022 of transitory inflation. A year where the Fed got everybody at it and got everybody believing a certain narrative. Perhaps what we didn't think about in late 2022 was the lag effect of these interest rates. That it would take 6, 7 months, 8 months for it to work its way through the system, and what a disaster raising them in the first place was. It really is a self-inflicted wound.
Absolutely. Absolutely. I mean, to view just the interest rates, the interest rates happen because the U.S. Federal Reserve and even the Bank of Canada and every central bank around the world unleashed a whopping amount of currency sloshing around the markets. Canada 4 times the size of our GDP we printed in 2020. No wonder we're seeing prices go through the roof. No wonder why people cannot afford to keep up with the cost of living today. And if you look at the US, the US had, trillions in debt that took, hundreds of years to make, and they literally almost doubled that within 3 months. So you just unleashed inflation, and to get to work, they have to show that they're doing something. Their job is to keep employment up and inflation down. So they have to use the one tool that they have and raise the interest rates.
Well, listen to this. That interview I was telling you about with David Rosenberg,
yeah.
He was mentioning in this interview that they use housing as part of the inflation target. So when they raise interest rates, you're continuing to raise inflation because people are having to pay more for their houses, their properties, and so it looks to the government like there's still more inflation to fight. He was saying that if you took that one metric out, they would be at 2% right now. Now, I don't believe that because I see inflation in food and elsewhere, but obviously that's going to have a major impact on their targets. It's wild.
And not just that. Like today we were anticipating what came out with the U.S. job numbers that came out, and it was already anticipated that the labor market was going to grow because you had some workers going back to work after strikes. You got the auto workers coming back, and you had the actors returning after their strikes. But the consensus is the underlying trend will continue to weaken and deteriorate in the jobs market. But because this job number came out better than anticipated, they're suggesting that is hot. It's overheating the market, Jeremy. That's included as inflation, and so therefore we could potentially have to, let's reduce the expectations of cuts. So that's what we're seeing the price
that's
action
just hot
today.
Air.
It's a lot of bogus hot air, but it works to their narrative, is what you were talking about earlier. It helps their narrative and prolong their narrative. It helps to strengthen whatever narrative they have. It's really just desperation, and they're trying to sweep the mess under the rug, but you can't do it.
No, and this comes down to what the problem is with manipulating. You can manipulate the narrative, you can manipulate the money supply, you can manipulate it all, but you can't stop the truth. And let's look at, and what we're talking about there is, let's just look at, for example, silver industrial uses. You can't hide it. There's 2 billion ounces of silver above ground, maybe. The amount of silver that's going to go into solar panels is absolutely phenomenal. There's not enough. Even if they wanted to go green, there's not enough to satisfy the demand for that. Even if they made it more efficient, there's still not enough. So that's not going to happen. And that means that either going green was just purely ideological, or they never had a plan. And now we're not even talking about batteries. We're not even talking about usages in everyday digital items, right? Anything that's digital, anything that's electronic has silver in it. So where is it coming from? There's a deficit right now of what's coming out of the ground and what's available. And again, medical usages, bandages, it absorbs bacteria. So you start to think about all of those incredible usages, like, a toothbrush that doesn't go bad because it's absorbing bacteria, or your athletic clothes that don't smell because silver weaved into it absorbs bacteria.
So important.
Or what about all this housing that they're going to need? Well, they're going to put silver into the mirrors, into the glass, right? It's used in transition lenses. What about all these computers? What about new cell phones? What about all these smartwatches? There's silver in it all. What about new batteries for EV vehicles? Toyota's coming out with one that's incredible.
That's it.
Right?
I was just looking at that.
So even as they improve things, the more they improve technology, the more they use silver. So at some point, you are going to hit a wall. The question is why manipulate it to the downside knowing you're going to hit a wall? Unless enough people don't know about it that when it does get reset much, much higher, they're left out in the cold. Again, it kind of goes to the golden rule. He who owns the gold makes the rules. So in some ways, they do not want you to own it. They do not want you to be looking at it because, let's be honest, most people buy at higher prices. We will sell way more silver at $50 than we ever sold at 25.
Mm-hmm. And that is usually the case psychologically. And looking at gold and silver prices over the last week, gold hit an all-time high over 2140 US per ounce. But if you look at the silver to gold ratio, last Sunday we were around 80-1. Silver would be undervalued at that point. If you look at silver today, the silver to gold ratio is 86-1. So this screaming buy, the buy for silver is on, the surge for silver is on, the demand for silver is on, says even the Silver Institute, even the military, they've grown silver scarce. Even Toyota has revealed that they're scarce in silver. They're moving towards fuel cell. And this technology is just going to grow because the battery power lasts longer. It's that simple. So you're going to have to embrace the technology, and the more we advance technologically, the more silver you will need. And to see silver, which is half of its all-time high, this is an opportunity. This is a huge opportunity in silver, and you need to get some ounces. Get started with a tube of maples. Get a silver combo. Christmas is coming up. It's around the corner. This is the perfect gift, something that will actually be a gift and will keep giving, because you're now teaching someone what money is. And what money is, it's divisible. It's portable, durable, recognizable, and scarce. Those are 5 attributes of money. And whatever you have in your bank account, if it's not scarce, it's simply not money. You need to give us a call. We are The Real Money Show, the original, guildhallwealth.com, 1-877-8-SILVER. We look forward to hearing from you.
Welcome back to The Real Money Show, the number 1-877-8-SILVER, the website, guildhallwealth.com. Jerry, just my opinion, I can't believe anyone wouldn't want to hold some physical gold in their portfolio. I mean, if you just look at the reason to hold it, which is it is negatively correlated to the currency. The currency is not going up. Ever. They can only deficit spend. They can only print more of it. It has a finite lifespan because it will lose its purchasing power over and over and over again. What do you think inflation is? It's not a magical mystery. It's the fact that they keep printing this currency into oblivion. And so it's so obvious that you need to counter the central banks and their inability to stop themselves. They can't help themselves. They're always going to take the easy route until it becomes very, very painful for the rest of us, which is what we're experiencing. It is such a no-brainer to hold physical precious metals. And I'm so passionate about that because I've seen it work. And I'm not saying, and I know you would agree with me, Jerry, this isn't about a panacea. This isn't, you only need to hold physical precious metals. It's just that by having some of it in your portfolio, you're hedging the one major issue that is the crux of everyone's problems.
It's this big phenomenon.
Which
How
is,
did it happen?
How did it happen? The government printed money and they decided to tax the hell out of you.
Did you see the Atlantic's article recently, last week? The headline reads, "Inflation is your fault."
Yes.
If people are so mad
see
about
that.
high prices, why do they keep buying so many expensive things? That's the cause of this inflation. You just keep buying more expensive things. How ridiculous. The Bank of Canada said it was our fault.
Well, that's just
And it was in your mind, actually. The Bank of Canada said, actually, the inflation, Jerry, it's in your mind.
That's deflection, though. That's if you're talking about the Overton goalposts or the Overton window, this is what they want you to think. The question is, how many people believe the government on that, right? Look at their other health policies all fall apart. How many people believe the government on all of those things, right? These stories fall apart eventually because you cannot hide the truth forever.
That's right.
It's going to come out and it's bursting everywhere. And so what we saw on Sunday night where the market burst higher, you're going to see more of that. And what we believe is going to happen down the road is that whatever amount of precious metals you're probably looking to acquire today, you will probably sell off 2/3 or 3/4 and hold the same value today in your portfolio, but it will be 3 times less because you're going to have spent all the profits on other things, a house, a stock portfolio, retirement, maybe that boat that you want, that you've always wanted. They say that The best day of someone who owns a boat was when they bought it and when they sold it. But
right.
I don't know, because I don't own one. But there's so much that can be done with the wealth transfer that's coming, and that you look for assets that are undervalued. And when you see silver's all-in purchasing cost just under $20 an ounce, you say to yourself, that's an asymmetric trade. I'm looking for something with a low risk downside. And what could the multiples be to the upside, Jerry?
I mean, Greg Weldon sees a breakout for bullion. He says the time to own gold is right now, including silver. Gold prices have fluctuated due to a changing dollar, he says, and recent extreme volatility underscoring the safe haven asset amid geopolitical events. And he's suggesting that with low current investment in gold, that 60-40 traditional portfolio, which is stocks and then bonds and some cash, it's not working. And as soon as the traditional portfolio managers include the gold, you'll have the participation. You will see the breakout, rising inflation, meaning this is an opportune time to hold gold and silver. And he predicts a significant rise in the gold prices. Watch the 2100 threshold. And in my opinion, once that 2140 threshold we see that resistance hit, we're going to be off to the races. If you look at the 20-year cup and handle, that is the resistance. And when we break up, it's literally a hockey stick up. And we'll enjoy the ride. And we'll watch the silver to gold ratio, because you'll then need a tool to give you an idea of where to offload some of the silver into gold, pivot out of silver into real estate, pivot out of silver. We use these ratios. And you don't have to be an expert. You give us a call. We talk, we consult, and we find out what is your threshold. What's your time? What's your tenure of hold? Is this a long term? If this is a short term, maybe if it's a short term, you're getting into gold. You're getting into bigger gold bars. So we'll talk the strategies, but where the silver market is going, Jeremy, I love gold, but I love silver even more. Silver is scarce, and when the military needs it, I need it more, because when they need it, and we know the market's scarce, we're going to see triple-digit silver. I even saw quadruple numbers in silver. So I do see this happening. And the crack-up boom happens in the stock market. The money flows out of risky assets and into a finite market like silver. We're going to explode much, much higher.
Yeah, I truly believe we'll see the silver market trading in the hundreds. I think it could go into the thousands. I think ultimately, look, we need to get to just 50 even. That's gonna be amazing. But that's gonna be the start of a whole new market and a whole new perception of what physical silver actually is in our society and how we use it and what it means for money. One of the things that I've heard against, let's say, a gold standard is that it means that you could have hoarding on the part of the wealthy. Well, that's why they started with the bimetallic standard in the United States. It was that, well, if one gets too expensive, everyone can move to the other. And that's the whole point, is that you at least have two oscillating currencies that give the chance to everybody to own something and protect themselves and keep their value sound. Mm-hmm. So they were very smart when they thought about the bimetallic standard. And so I know today everyone's thinking about different forms of money, but gold and silver are real money because they're an actual asset that has an innate value to it, that's had an innate value for thousands of years. Mm-hmm. They're on the table of elements, right? It's a commodity, but unlike other commodities, they don't erode and corrode and disappear. That's why they're such a great store of value, and because there's so many other use cases for them, not just as a form of money. So again, we're not talking about having everything in the portfolio, but in terms of looking at something that is currently undervalued, where it could go up 10 times, mm-hmm. I don't think you could look at anything other than silver right now. Last few points, sir.
I mean, this is it. We have to look at the record. And if you look at the precious metal space, we have a millennial record as a store of value, and it's the most widely recognized and universally accepted valuable in the world. It's the only tangible, non-financial asset that's always liquid, very easy to own, and without ever involving the financial system. So if you are like me and you see the risks of the financial system, the pension plans, I mean, Alberta wants out of the pension plans, guys. What are they talking about? We have to do the same thing. So give us a call, watch our YouTube page, because we're coming out with new content all the time. And we look forward to meeting you and talking to you about what means most about you and your wealth and your portfolio, intangible hard assets.
Yeah, and look, our success is success for other people around us. It's not a selfish quest. It's if we're successful, then we can help other people around us be successful. So we're looking at ways that we can do that where we're not following the herd. And that's why it's so important to look for things that are of great value and that can stand the test of time. That's what precious metals do. The number 1-877-8-SILVER, the website guildhallwealth.com. Jerry, thanks for joining. It was a great conversation this week. I enjoyed it. And thanks to all our listeners for joining us. And we look forward to speaking with you next week here on The Real Money Show on 640 Toronto.